The White House today insisting Americans aren't on the hook after the second and third largest bank collapses in U.S. history. But our next guest disagrees. He says the more politicians protest that their bank deposits are not a bailout, the more I know it's disguised bailout. Joining us now is YouTube financial analyst and advisor Kevin Paffrath, and he was outside the Silicon Valley Bank's main corporate office earlier today. Kevin, welcome to the show. It's always great to have you. Love that picture there. Okay, so President Biden trying to quell fears of SVP customers earlier today. You were out there. Do people feel confident that things are going to be solved, that this is the right solution, that the government is stepping in here?
It's absolutely not what we saw on Friday or Saturday. Thanks so much for having me, by the way. But it seems a lot more calm than what we saw last week. I was expecting people throwing papers and fighting to get into the bank. I actually flew out there. I had a few meetings, but I flew out there because I thought there'd be excitement. I thought I was going to go to a show and have a live show, and all I got was a row of reporters. So there wasn't much there. But so maybe in that sense, the government's doing the right thing. But I will say, the branding of it is misleading. This is 100% a bailout of the 1% by the 99%. The regular Americans who are working hard are paying for Silicon Valley startups and tech via this bailout. There should have been a deposit haircut. There should have been a lesson to these banks who basically provide lines of credit with very little underwriting for startups with very little or often no cash flows. And so I do think, unfortunately, the 99% are getting shafted here. And the government, the last thing they want people to believe is that this is a bailout, when the reality is it is a bailout.
So, Kevin, here's the thing that I was thinking about that was interesting. Is it for a lot of folks out there, they're saying, okay, I'm protected if I put $250,000 into a bank. And for a lot of folks, they don't have $250,000 in cash, so it's probably not that big of a deal that they think of every day. But as you might have heard, Peter Morici brought up a good point. For a lot of businesses that have a payroll, they do have $250,000 that is coming in on a regular basis that they do have to. So what would you say to the company? You talk about the haircut. If you're a company that has to have a large amount of cash to cover a payroll, what would you do, or how are they supposed to operate? Because they have to have that kind of cash on hand to make their weekly or biweekly payroll.
There are two important steps to follow. Number one, type into Google FDIC calculator. You can actually go through their web portal and calculate how much FDIC coverage you can get by having multiple different types of accounts. You might be surprised, but many business owners probably have FDIC insurance that's way higher than $250,000. And you could use that calculator. It's free, FDIC.gov, just Google it. The second thing is you've got to have, in my opinion, the majority of your uninsured assets, that is anything above those insurance limits, should be at a tier 1 bank. I don't care what bank it is, but it should be one undergoing the Federal Reserve stress tests. Silicon Valley Bank was not undergoing those stress tests. They were too small. Now they got bailed out this time. But as a business owner who's responsible for making payrolls, it's my responsibility to make sure that that cash we have, that working capital, is as safe as possible. And there's nothing like one of the top 4 banks or top 8 banks, even like a JPM, Bank of America, Wells Fargo, Citi, even though we might not like them, even though it might be harder to get loans from them, that's where we should absolutely at least have some of our insured assets, because if something goes wrong there, we know the Federal Reserve is pretty much always going to bail them out. I would bet my company's assets on the fact that the Fed will always bail them out. And that's actually what I did about a month ago. I have a real estate startup called HouseHack, househack.com, and we have investor capital from our fundraise there. About a month ago, I don't know what happened, but I started getting the heebie-jeebies that in this recessionary environment, something could start happening at the banks. So I moved all of my money from a small bank over to JP Morgan. And I'm so glad I did. Now, we ended up bailing everything out, but that's what I did.
Yeah. And I think that's what a lot of people are focusing on now, moving their money from small banks to big banks. Kevin, we're out of time. It's always good to see you. Thanks for being here.
Thanks.